can we just zoom out for a second and just think about what we're talking about in 1 week on a roundup? You've got Ramp issuing stablecoin backed cards. You've got Stripe offering stablecoin accounts in over 100 countries. You've got Superstate launching tokenized equities. You've got Coinbase acquiring Deribit for almost $3 billion in the biggest crypto M&A deal in history. Like, if you're not, I know the prices are, I mean, Bitcoin just hit 100K, so let's go. But like, I know people are kind of like, yeah, this is bull market, bear market. It doesn't matter what market it is. You've got instant 24/7 financial infrastructure being built in real time in front of our eyes. It's pretty damn cool. This episode is brought to you by Scale, the next evolution in layer 1 blockchains. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. Thanks to Scale for making today's episode possible. Hey guys, Jason here. Just to let you know, we have Permissionless 4 coming up in June from the 24th to the 26th at Industry City in Brooklyn. This is a conference for the developers and builders where we'll be focusing on the DeFi renaissance, applications, token design, and much more. Click the link in the show notes to grab your ticket today and use code EMPIRE10 for 10% off. What's up, everybody? Welcome back to the Empire Roundup. You've got the man, the myth, me back in the seat. And we got the second co-host, Santi.
I was gonna the second co-host. Notice that there is rank and priority, ladies and gentlemen. I will point out, Yano, you're growing a little bit of a beard. But as I was observing that, I did see what appears to be an injury there. What's going on?
It's an injury. Yes.
Got it. I blink twice if there's violence at home.
Well, first off, my face is super swollen because of these cluster headaches that I get. I am loaded up on prednisone. So my face is all puffy, and then it doesn't help that Will told me I need a better story for this. I dropped an iPad on my face. And
you know how many times this happened to me? Like I think I'm surprised how I haven't broken my nose.
My friend's dad dropped an iPad on his face and he broke his nose. And this was a couple years ago, and I'm obviously laughing at the guy. And now here I am with, look at this. This thing packs a punch. It's like it's a real boost.
Yeah. That's crazy. You should have you know what I'm going to get you for your birthday, Christmas? You know that babies have the iPads with the foam around it?
Yes, I don't
basically make them indestructible. It sounds like you need that.
I guess clearly I do.
It's just go pause. Anyways. Well,
what's going on? How's post Dubai?
Oh, very good. Catching up on a lot of work, but wow, what a week, huh? I mean, we should just jump right in it because
let's jump right in. Here's the first thing. This is so Teddy Fusaro from Bitwise aptly pointed this out. So you would think, Bitcoin hit 100K. Let's go. Things are quiet around here. Look at this. This is the Bitcoin at 100K. Look at Google Trends. No interest in Bitcoin. This is an incredibly bullish chart of Google Trends and Google interest over time of Bitcoin. It feels, has it ever felt this quiet with Bitcoin at 100K?
No. Yeah, it's fairly quiet. And also it's like this is the classic, you're seeing it in real time. What do you believe in that others don't or are overlooking? Like if I think Google Trends is interest, maybe all this interest is now going to like ChatGPT and Perplexity and some of the new search engines, so to speak, because Google took a massive hit this week. It was down like 9%. Basically, like, investors are pretty worried that their core business is being chipped away by basically people are not searching anymore. This is why the only reason this chart would not be as bullish as I want it to be is if people are no longer using Google search, and this is no longer an interesting barometer. But to be fair, I think it's still pretty accurate.
What do you make of the markets right now? Because there are some things like I've been very publicly bullish on Robinhood on the pod, and we had a nice beating of earnings. Robinhood's up 9% today, 16% in the last 5 days. I think Coinbase reports Coinbase is up 6% today. I'm pretty sure they report
just bought Deribit
after hours. Yeah, obviously we'll talk about the Deribit deal and talk about M&A in general. Any thoughts on markets right now? Or should we get into the news?
Generally speaking, nothing to comment on other than I've read a bunch of the morning reports that I get from banks and research reports, and it's like, there's excitement and reasons to be optimistic about trade deals. I think with the UK, there's a meeting in Switzerland between the US and Chinese delegations, and so it feels like markets hate uncertainty, and they reacted. You remember when we recorded that macro pod with Quinn, um, and it was I think markets reacted to that, but I think the market's feeling optimistic about some trade deals,
Yeah.
happening, and a lot of that going away. But no, let's
Oh, let's
jump
get into the
into.
news. So big news week. Things I want to cover. Ethereum had Pectra went live on Ethereum mainnet. There is a lot of M&A, obviously being driven by the big one is the biggest M&A deal in the history of crypto. Coinbase acquiring Deribit. I'd like to talk about that. Stripe had Stripe sessions. We'll be talking about stablecoins. I want to talk about their product release. I think it's the most important release in stablecoins actually that I've seen, and I think it's actually kind of being underplayed a little bit on crypto Twitter. Robinhood is exploring launching a chain. The Dems have been turning on stables. And the Empire listener section, some folks were asking us about MicroStrategy, Bitcoin's buying, corporates buying Bitcoin. So we'll get to that if we have time. But maybe the first thing is I do want to just give a big shout out to everyone involved in Pectra. So Pectra went live. Pectra went live. What day was it? May 7th. So that would be yesterday on Wednesday.
We're Thursday,
yeah, we're recording Thursday at 4 p.m. here. Ethereum Pectra went live. So that's big, very massive upgrade. I'll talk about it maybe from a more technical point of view, but I'll talk about it really from the user's point of view and why this is interesting. So first, the upgrade allows the max ETH stake to a node to increase from 32 to 2,048 ETH. The goal is reducing the need for redundant nodes. So that's one. Two, the blob transaction capacity doubles the target blob count from 3 to 6. And then in addition to this, the upgrade enables a new transaction type that allows batch transactions and gas sponsorship. So what does that actually mean? There's a great thread by Benji shared from the Ethereum handle. So for folks who missed it, I'll kind of walk through some of the highlights. Basically, if you think about the merge was for the protocol. Pectra is for the people. And Pectra, as Benji explains it, Pectra is kind of Ethereum's glow up. This is where Ethereum starts to feel like more of a user-friendly chain, fewer clicks, smarter wallets, cheaper transactions, cleaner staking. So on the fewer click side, what this means is no more approve and confirm loop. You know those kind of loops that you get with approve and confirm? There's no more double signing for every single action. So one of the things that Pectra does is it reduces how many clicks it takes to get to the action that you want. So that's cool. Second is smarter wallets. Right now, wallets are used to I think what Pectra does, I need to dig into this a little more. I think what Pectra does, it allows normal wallets to start to act like smart contracts where you can start to batch transactions, skip approval pop-ups, pay gas in any token, just a lot less friction. I would imagine folks like Dynamic.xyz, Privy will start to really benefit from this. And then all the wallet experience should just get much better. And then the third is cheaper transactions. So more blobs, better scaling for the L2s, lower costs, especially during high traffic periods. And then staking. Yeah, staking is more flexible, more efficient. So you raise the validator cap from 32 to 2048, faster deposit recognition, and then smart contract enabled withdrawals. So yeah, I mean, like I'm not working on the code of Ethereum, obviously, but I think you just have to give a massive recognition that these upgrades are like, it's very, very, very tough to do these upgrades. It is hard for even a company like Blockworks sometimes to upgrade our code. It is orders of magnitude harder for this decentralized network to pull it off. I saw Saigar, who's building Abstract, was like, it's like upgrading an airplane engine in mid-flight. So just very, very big hats off. I don't know if you have any other thoughts on Pectra, but.
No, just that. I mean, very impressive that Ethereum has pulled it off yet again with first its transition from proof of work to proof of stake, and this network upgrade Pectra is just really impressive. And I think one of the core things about the Ethereum community, honestly, is this ability to coordinate and do these upgrades. And I mean, it just tells you a lot about how impressive I don't want to underestimate how difficult this is, and the crypto is really good at coordination, but there are networks that have struggled with that. The Bitcoin community particularly is like, but this I think is one of the uh, brighter things that Ethereum has, which is this ability to coordinate and do upgrades, which is pretty Herculean task. So yeah, congrats to everyone that was involved in it, and pretty
So
important stuff.
So ETH a month ago was 1,500. ETH today 2073 at the time of recording. Does this make you think? So you've got the kind of ETH pivot, ETH whatever we're calling it, ETH pivot or ETH upgrade. We've got Pectra. Does this start to make you reconsider the ETH investment case?
Well, yes, in the sense that I think the Ethereum community is really kind of galvanized and like rallied. It's kind of gotten its mojo back together because it feels a sense of urgency. So, how much of that's priced in? Is the network worth, $250 billion? I still have concerns and around the L1, L2 dynamics and whatnot, but um, I don't read too much. Like I wouldn't. I'm not updating my thesis just yet for other reasons. I do think that this is very impressive, but I do still have concerns around value accruing to the L1.
Mm. Okay, so we're not buying ETH yet.
No,
not buying ETH.
Not me personally, but again, none of this is investment advice, so everyone should do their own research and come to their own conclusions. But I we'll talk about in other news segments, but I think it's pretty interesting. You have Meta, Robinhood, and other corporates exploring um, tokenizing stocks, launching their own stablecoin, functionalities, and they're in these reports. They reference a couple of networks. Solana is one of them. Arbitrum is another. And I think it's just interesting to maybe focus on that because I think that to me that's like probably more exciting where a lot of these players are deciding to build on. For instance, I believe Robinhood was meant. Yeah, exactly. This is something that in this particular instance, the comment is that they're evaluating Solana and Arbitrum. Of course, none of them confirmed this, but if it were to be true, I mean, I think you would argue who accrues more value here. Say that Robinhood launches a blockchain and they deployed on Arbitrum. Obviously bullish from a overall Ethereum ecosystem perspective, but from that standpoint, I mean, Arbitrum stands more to gain as a network than ETH as a substrate for the overall ecosystem, I would argue.
This episode is brought to you by Scale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Scale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Scale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Scale Network. That's Scale spelt with a K. Thanks to Scale for making today's episode possible. I wanted to take a moment to tell you about Marinade, the platform connecting Solana holders with the best staking rates on Solana. Marinade unlocks a high-performance staking delegation platform that brings billions in liquidity and security to the Solana market. With solutions for both individual traders and global institutions from both DeFi and traditional finance, use Marinade to earn rewards on your Solana treasuries and holdings. Optimize your Solana staking with Marinade's best in-market features, including user downside protection through protected staking rewards, and optimized delegation via Marinade's automated auction marketplace. To learn more about Marinade, visit marinade.finance or click the link in the show notes. Yeah. So for folks who missed it, it's interesting. I think this was Bloomberg who reported this. Robinhood is developing a blockchain-based platform that will allow retail investors in Europe to trade U.S. securities such as stocks. The venture will likely be launched through a partnership with a digital asset firm. Arbitrum and Solana have both been under consideration for the partnership. Yeah, very interesting. What route, if you were a betting man, what route do you think they go?
Mert, if you're listening, would love for you to comment on this because he might have perspective. But yeah, I think from a launching your own blockchain, you've seen a lot of other folks deploy their own chain as an L2. Kraken and a few others, or Avalanche L1. Obviously, we're doing that as inversion. But to me, it feels like from a launching your own chain, probably Arbitrum from a technical standpoint. But I would actually like to bring someone from the Solana community to understand how it would how this would work with Solana. Like there's like eclipses of the world and neons and like sort of like these other networks that are on the periphery. But yeah, I would kind of really be curious to understand how that would work.
All right, let's talk about the bigger news of the week. Coinbase is acquiring Deribit. It's the largest deal in crypto history. So I think folks have known for a while that Deribit has been in market. It's been rumored that some other crypto exchanges were looking at them. For context, Deribit controls roughly 80% of the crypto derivatives and the options market in. So Deribit is a derivatives venue. They control roughly 80% of the market. I think back in March, Bloomberg leaked that they were selling. They've been selling for quite a while before that, I think. Pretty relatively small team. They've done an amazing job. This is a really interesting deal. So I heard that Tencent was looking at the deal. I heard that some of the other big crypto exchanges were looking at it. But yeah, it's a $2.9 billion deal, 700 million in cash, and then another 11 million in shares. Coinbase stock is at $200. That's 2.2 billion. So 2.2 billion of stock, 700 million of cash. So the last numbers that I saw from Deribit from a fundraising deck was from 2023, where they were doing roughly like 85 million in profit and 120 million in revenue. So really high margin company. But the thing that's happening here is the exchange. There's a broader trend of M&A right now happening in crypto. The exchanges are the big buyers in crypto right now, and they want two things. They want funded accounts, and they want the ability to offer more products to their traders. So perps, options. I think the next wave of acquisitions that you'll see crypto exchanges make will be in the tokenization and RWA space. So the ability to offer, maybe Coinbase can offer tokenized stocks, credit funds on chain, things like that. So really, really interesting acquisition. The industry needs M&A to thrive. You need the venture investors to do well from their equity investments. You need the companies to be able to go public. You need companies to be able to sell. So this is a really healthy dynamic, and I don't know. I love to see it. I think it's great.
Yeah, absolutely. I mean, what's interesting too is Coinbase is up on the announcement. 6%. The entire market's rallying, but we'll see after earnings what the commentary is. If I believe they report after close today, right? Coinbase does. So that's going to be interesting. What the commentary is from the team, Brian and the team. So yeah, it should be really interesting.
Look at this. So we actually Blockworks Research just launched M&A and fundraising data on the platform. Look at this. So it only goes back to Q2 of 2018. This is this big green chart bar right here on the right. This is Q1. So here, wait, let me actually make it
Ripple.
Yeah, this one is Ninja Trade, the Kraken Ninja deal. This is Ripple Hidden Road,
right?
Or vice versa. But yeah, I mean, look at this M&A data by sector just growing. This doesn't even include the Deribit Coinbase deal. Well, this will be added overnight. So
wow,
yeah. So I guess zooming out from this deal, I mean, the thing that maybe some folks are not privy to that's just really interesting is I've never seen so many crypto companies in market right now.
Yeah.
Especially the kind of class of 2017. A lot of the custodians, a lot of the data companies, a lot of the staking folks, these are the founders have been building for 7-8 years. A lot of the companies are doing somewhere between 5 to 30 million in revenue, and a lot of them are selling.
So. Why would Deribit sell?
Um, because they've. Why would
Do
Deribit
they
sell?
do they want like access to the distribution that Coinbase has built? It seems like look, they command most of the market share. Is your point saying like they have so much market share that it can only go down from here, and if it goes down from here, it starts like they've sold
I
at the
think
right
so.
time?
And it's a I mean it's a slightly messy cap table, but it's a heavily founder owned company. So
Mm.
I think this might just be the founder saying, look, we've been building for like a decade in crypto. Um, it's a multi-billion-dollar acquisition, and this is generational wealth for the founders, I would guess. Also, maybe if you take that out of the picture, probably you could argue the space is getting much more regulated and is moving more onshore. Deribit is
Well,
more like an offshore venue. Um,
yeah.
yeah,
Yeah, I think, I was on another
you,
podcast earlier today, and you gotta think, like, I think, and you let me know if this makes sense, there's a lot of signaling Coinbase buying this because they feel that they can integrate Deribit into their core offering, which they've been missing for a while. Like, what's
yeah.
made Coinbase, product offering has really lacked is this, right? Options and perps and, and so offering this, I mean, it's probably really interesting from their standpoint, justifying the acquisition, like, and how they think about layering it in. It probably tells you everything you need to know about how they believe the regulatory environment is going to unfold, particularly in the U.S. You also see, I think it was last week, you've seen a lot of the offshore exchanges now start to build a presence in the U.S., which is really encouraging. I think it was like OKX that is now launching an office in California. I think in San Mateo near SF. So yeah, all this to say is like really, really encouraging developments on the regulatory side, like greater
So I
regulatory.
moderated this thing with the
Yeah.
head of Coinbase's derivatives business
Oh,
in,
right.
in in Dubai, and they are. I mean, it is an all out push for them with perps. Like I think Robinhood and Coinbase are. I mean, they're rolling out perps, derivatives, options. It's all coming to the U.S. So I want to talk about Stripe because I think people missed how important this thing is. So Stripe had their annual event called Stripe Sessions. There's a 40-minute presentation from the Collison brothers, from Patrick and John. I would highly, highly, highly recommend going to watch that video. They talk about two things in that video. They talk about AI and stablecoins. And there's actually this amazing image. Here, I'll share this right here. This is an image of payment volume growth in the first 24 months of Stripe versus Bridge. And for those who are listening, not watching on YouTube, it is just up and to the right for Bridge. Bridge just like vastly outnumbers the first 24 months of volume from Stripe. The thing to understand with Stripe here, I think, is that so they launched two products. One was stablecoin backed credit cards or stablecoin backed cards, but the other product was merchants can now store stablecoins. And the reason this is so important is I think it was last year they announced pay-ins, right? So you could pay in stablecoins. Then they announced earlier this year payouts, right? So you could actually pay people. You could pay like freelancers and contractors and your employees in stablecoins. Now they just rolled out the ability for merchants to store stablecoins. So another way to put this, Stripe would never say it like this because it's for regulatory reasons, but Stripe just launched a stablecoin bank for merchants. Stripe is in 45 countries today because of stablecoins. They're now in 101 countries. So it just doubled the number of countries that they're able to be in. They completed the payment circle, right? Pay-ins, payouts, and a way for merchants to store stablecoins. So this is really the first complete circle of stablecoin payments in the world by anybody, crypto company or non-crypto company. And I'm just shocked that more PSPs like Audion and Checkout and folks like that are not just massively pushing into this space. Because what Stripe just did with stablecoins, they're in 45 countries, now they're in 101. This unlocks global access for them. So any business in the world can now have a US dollar bank account.
That's
It's massive. I think with this alone, Bridge just paid for itself. So
well, 100%. Like he uses a term that I really like, which is borderless finance.
yeah,
Just phenomenal. He has a very good way of crystallizing concepts, like room temperature semiconductors and then borderless finance. But yeah, I mean, the way I think about it is like, just think about it for a second. The financial system predates the internet. And this is kind of the first time we've been able to kind of take a kind of, as you describe it, a fully complete end-to-end like offering that kind of detaches from that. And the way that how accretive this is to Stripe's business is, and the amount of activity that it unlocks, right, is kind of
Yeah.
crazy. I was on a podcast with Kai from Visa. They also just announced an acquisition, or sorry, a strategic investment, and in a similar type of offering, like Bridge. And I think now like every major financial institution is kind of looking at this and saying, yeah, like we need to get our act together on stablecoins. And um, a whole topic for a sep, but I would like to do a podcast around with maybe Kai or Simon or other folks talking about like, what does this actually mean for banks business model? What are the things that are going to be truly disintermediated, or does this totally unlock like just more flows, right? A lot of these countries, like just to your point, like just are not even digitized and are basically cash-based economies. And with stablecoins, like this really kind of unlocks a way to do business, and it just grows the pie. And so no, it's really powerful. He
Yeah.
goes into that present. It starts in minute 24 and it goes for like 4 minutes. But again, in there, he talks about like big companies using stablecoins to pay vendors internationally, like, SpaceX and Tesla. And these are not small companies that are using stablecoins just to like, level set the conversation.
Yeah. Well, and so that was the payout from a couple months ago. Now, so I talked to some folks who, uh, I don't know. I talked to some folks. I talked to some folks who are familiar with the product and the early usage, and they said that they're seeing massive, uh, basically massive usage, B2B usage of stablecoins because of what Stripe just rolled out already for the
Mhm.
early beta users. And
Yeah.
so, like now you've got someone in, I don't know, maybe Singapore who's able to pay for a SaaS product in Berlin,
Hmm.
and they're paying entirely in stablecoins right now.
Yeah.
So again, I
Yeah.
think that like the Audions and the checkout.coms of the world really have to move on this right
Mhm.
now.
I think like I'll just make a really quick comment on this, which is like what has really changed over the last 6 months. So like Stripe acquired Bridge under a year ago. Was it 9 months ago? We had Zach on the podcast, and we described it as like the Instagram moment. Like they bought it for $1 billion. Facebook bought Instagram for $1 billion. And it was like hugely transformation for their business. Um, and in October, yeah, like 6 months ago or so. And so I think the difference, like, I think the difference between like stablecoins have been around for a while, right? My point is stablecoins in your MetaMask or Phantom or exchange don't feel like money, whereas stablecoins integrated in Stripe's flow with merchants or with or like PayPal, or it feels like money. And so it's just like it may feel like a subtle thing, but I think like the whole point of fintech, the name of the game is distribution, and being embedded in kind of, there's a great example of a demo of how this looks like stable coins are just part of like transferring to your bank account, and it's that flow that just makes
Yeah.
it super intuitive for the user to be like conditioning them to use stable coins. And it's just so powerful.
Yeah.
So yeah.
Yeah. Yeah, it's amazing. The other thing that this comes on the heels of is the Fed's 20-page report on
Mhm.
stablecoins. I don't know. I think we didn't talk about this because we were at Token, but there's an amazing 20-page report. This is from the Federal Reserve. This isn't from Blockworks Research or anything. This is literally the Fed saying that stablecoins, right, with a market cap of 234 billion, are ubiquitous. I'm quoting from the Treasury's report. Is it the Treasury? Who is it? Yeah, it's the Treasury. Excuse me. It's from the Treasury. I'm going to quote from this report. Stablecoins are ubiquitously utilized as cash on chain, effectively serving as a new payment mechanism. An emergence in tokenized money market funds has recently created an alternative option to stablecoins, primarily given their yield bearing feature. Evolving market dynamics, and this is the kicker right here, has the potential to accelerate stablecoin trajectory to reach a $2 trillion market cap by 2028. A $2 trillion market cap. That's not coming from some moon boy crypto panda on Twitter. This is the U.S. Treasury saying that stablecoins could reach 2 trillion in market cap by 2028. So
Totally.
pretty amazing.
100%. There's another perhaps development. I mean, there's so many. Like I want to talk about Superstate, the Solana paper that came out. Like tokenizing stocks is really heating up faster than I anticipated. Before we go there, Coinbase just announced the X402 standard for native payments, which really dovetails really nicely into what was central to the Stripe conversation, which is like stablecoins and AI. And it's funny they put them as the two most important things because I think X402 comes in and really enables that, particularly for AI agents.
What is X402?
It's a new standard. So the TLDR, I'm going to read, is Coinbase is launching X402, a payment protocol that enables instant stablecoin payments directly over HTTP. It allows APIs, apps, and AI agents to transact seamlessly, unlocking a faster, automated internet economy.
Oh, this is cool. You can add us. Okay, so you can basically this is nifty. Okay, so HTTP 402 is the client error response status code when the status code was created to enable digital cash or micropayment systems. No standard convention exists. Different systems use it in different contexts. 402 payment required. So you've maybe seen this on the website. So what they just rolled out, that's smart, is you can now add a single line of code into your app, require USDC payment for each incoming request. That's interesting. If a request arrives without payment, the server responds with HTTP 402, prompting the client to pay and retry. X402 allows any web developer to accept crypto payments without the complexity of having to interact with the blockchain. Very cool.
Yeah, it allows developers, AI agents to pay for API services and software directly with stablecoins over HTTP.
Yeah,
with a few lines of code. So again, it's just so transformational. Kai from Visa and the podcast that we just recorded was like, is the AI agent like using stablecoin narrative overblown? Which I thought was like an interesting pushback because his whole point was you could just give your AI agent your credit card. And I was like, and micropayments have really taken off, but I'm just sort of like introducing like a pushback that I thought was worthy of more conversation. But nonetheless, like this is a pretty cool standard, and credit to Coinbase because they've been really pushing and have been very good contributors to code bases across ecosystems, and particularly standards like this one, which is really great to see from Coinbase.
This episode is brought to you by Skale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Skale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Scale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Skale Network. That's Scale spelt with a K. Thanks to Skale for making today's episode possible. I wanted to take a moment to tell you about Marinade, the platform connecting Solana holders with the best staking rates on Solana. Marinade unlocks a high-performance staking delegation platform that brings billions in liquidity and security to the Solana market. With solutions for both individual traders and global institutions from both DeFi and traditional finance, use Marinade to earn rewards on your Solana treasuries and holdings. Optimize your Solana staking with Marinade's best in-market features, including user downside protection through protected staking rewards, and optimized delegation via Marinade's automated auction marketplace. To learn more about Marinade, visit marinade.finance or click the link in the show notes. All right, big other shout out, Mr. Leshner. Leshner and his new company, Superstate, recently just launched Opening Bell. They launched this today, actually. So Opening Bell is a it's a platform from Superstate where companies can issue SEC registered shares directly on chain. The first issuer is Sol Strategies. Sol Strategies is basically Microstrategy, but for Solana. This allows someone like Sol Strategies to issue their SEC registered stock directly on chain. They're starting with Solana. I think they'll expand to other chains. So I actually don't fully get it. I'm reading it right now. I'm going to try to understand this in real time. Our first announced issuer, Sol Strategies, because Sol Strategies is public, right? They're a Canadian public company. They've begun the process to list on NASDAQ. They're now exploring the opportunity to bring their shares on chain via Opening Bell. Okay, so this would mean this platform, Opening Bell, you could trade those shares on Solana. So I think it's cool. I'm not fully following, actually.
Leshner, if you're listening, you should come on.
I see. Connects to okay. So the shares. Okay, then you can take those shares, move them around in DeFi. Okay, on chain share issuance, private companies can register and list their shares directly on chain, and then those shares can actually trade in DeFi markets 24/7. Interesting. Yeah, I was with
Superstate is an SEC registered blockchain enabled transfer agent.
This is similar to what I was. Okay, a lot of folks are working on this. So secured. We had great podcast actually with Tarun, Christine Moy, who's the head of crypto at Apollo, and Carlos, who's the founder of Securitize. That drops on Monday. Securitize, I think, working on something similar. Ondo, I was with the Ondo folks at dinner last night. They're working on something similar. So it does feel like this next wave of tokenization will come via public equities moving on chain.
Yeah, and basically for context, like there's a great article about Superstate that talks about like what exactly is a transfer agent. Transfer agents act on behalf of the issuer to track, basically just tracking ownership, issuing, redeeming shares, distributing dividends. Like they're kind of like the infrastructure between the issuer and security markets, capital markets. And so, the you're right in pointing out like Securitize, Ondos of the world, like basically RWAs really fit into this, right? Because if you're an issuer and you're recording this like in a blockchain, then if you're migrating all of that functionality to a blockchain, that's basically like Superstate and some of these other players are trying to do. This announcement, if I'm reading correctly, is just for issuers of financial products.
Yeah.
So
yeah. Can we just zoom out for a second and just think about what we're talking about? In 1 week on a roundup, you've got Ramp, right? One of the biggest, like Blockworks uses Ramp. You've got Ramp issuing stablecoin backed cards. You've got Stripe
especially in Latin America, which is really exciting.
Yeah, you've got Stripe offering stablecoin accounts in over 100 countries. You've got Superstate launching tokenized equities. You've got Coinbase acquiring Deribit for almost $3 billion in the biggest crypto M&A deal in history. Like, if you're not, I know the prices are, I mean, Bitcoin just hit 100K, so let's go. But like, I know people are kind of like, yeah, it's a bull market, bear market. Doesn't matter what market it is. You've got instant 24/7 financial infrastructure being built in real time in front of our eyes. It's pretty damn cool.
Yeah. You extend this further. So like, I'm really now interested in like the Superstate case, like Sol Strategies does this. That's like the first proof point. And then, I guess, when do we see the first, decently sized public company go through this? Is it Galaxy? Is it someone else? Like who does it? Like, I guess what is it?
So here's here's what I've been thinking about. So originally, crypto companies wanted to IPO, right? Like let's say you're the class of 2017 and you raised at several $billion in 2021 or 2022. Who are some companies? Ledger, Kraken, Circle, Blockdaemon, BitGo, Anchor, right? That cohort. The natural evolution was let's go public. And then it became, oh shit, going public, that's actually pretty tough, right? That maybe that's too tough. So all right, the next wave, if you were a founder, was like, I'm just gonna go direct to the users and issue a token. And a lot of those people made a lot of money. Now we're in the wave where actually, hey, issuing a token might not be the best play. Like that seems pretty tough. Maybe you want to wait a little longer than you originally thought to issue a token. So now we're back in the IPO. Now we're back to like, hey, if you're maybe IPOing is the best move. There's a lot of SPACs being raised right now. A lot of people talking about IPOs. That's a side note, by the way. It does feel like SPACs are back weirdly. But IPO is also really difficult. I do wonder if, like, let's say you're a company like Phantom Wallet, right? Phantom raised, what was Phantom's last round at? I don't know if you invested.
A couple billion.
Phantom, I think it was 3 billion maybe. So yeah, in January, Phantom raises 150 at a 3 billion valuation. Let's do a hypothetical here. Would you, if you're Phantom, would you go public? Try to go public? Would you issue a token, or would you go public but do it natively on Solana, where
The last.
your customers are?
The last.
Right.
Yeah, absolutely. Like, I think this comes at a really interesting time of public markets, which is there is a whole slew of privately backed companies that are not IPOing, and there's always concerns around capital markets and markets being soft and whatnot. But what may be really interesting is, I don't know if it's too far fetched to say, but if you're a venture backed company that hasn't exited, but do you actually credibly say, hey, maybe if this starts working, maybe Soul Strategies is no one pays a much attention to, even though it's interesting. But as more companies do this, can this like basically tapping into crypto capital markets, as you've already seen it with RWAs, tokenizing treasuries has been interesting. If this starts working, basically, what do you get in the menu of options? Like going through investment banks and listing on NASDAQ, or you know um, listing via this process. You're tapping into what more liquidity, programmability. Maybe you're lowering costs to do the actual process end to end. But like the capital formation piece might be actually really interesting. The composability of it, right? You're existing within this DeFi network, which you can use very natively, and composability is a great thing, right? We're finally going to start seeing how like DeFi performs in integrating these assets that have vastly more demand, right? Like you have you know extending into capital markets. So we've
Right.
always talked about DeFi like being this infrastructure that has a lot of Lindy. It's existed for quite a bit of time. It's like very resilient in many ways now. But but said differently, imagine that you have like tokenized equity for Phantom, and then you can deposit that in a money market protocol like Camino, borrow against that, or earn more of
Right.
Phantom equity the more you use the platform. So say that you're a power user of Phantom, they go through this process, they are able to, instead of airdropping you the token, they give you this kind of like, tokenized stock,
Yeah.
and then you get more of that based on your usage. And I've always felt
Oh
that the
my
whole
God, this reminds me. You know what? There is an episode
or
that Marco Santori, who is I don't even. I think he just took a job as like at
venture partner at
Pantera,
at
maybe.
Galaxy. No,
I think at
Galaxy.
Pantera.
Yeah.
Um,
No, Pantera, yeah.
but he was chief legal officer of Kraken. He did an episode with Laura Shin in, I want to say, 2016, maybe 2017, where he talks about this idea that the users of stock, the buyers of stocks, and the users of the product of stocks are two totally different people, but they actually should theoretically, in a perfect world, be the same. Like the consumer of Nike stock, the consumer of Nike products should also be is probably the best potential buyer of Nike stock.
Yeah.
And I don't know, 8 years later, it's coming true.
I mean, it almost makes too much sense, right? Which is your users should also be your investors, and they're
Yeah.
reward your users, and there's just stronger alignment for a variety of reasons. Like there are companies that have tried to do this, but yeah, I think we're gonna look back and say, yeah, that was pretty obvious. Like, I wonder what took us so long to do this, but
Yeah, I mean,
um,
it even makes me think like we've been getting pitched by some bankers to like go do something like, oh, Blockworks should go public or something, or do a SPAC or some shit like that. But and I was just like, we're not gonna, it doesn't really make sense for us. But it has me thinking like, oh, if we were like, would I rather go public, or would I rather go public on chain, where all of the people who consume Blockworks content are?
yeah, the argument historically has been, look, there's vastly more money in traditional capital markets, Nasdaq, NYSE, all these different capital markets are really, really robust. We should double click, maybe not now, but like you remember, there's like attempts to build other exchanges. There's one in Texas for like smaller
Yeah,
companies, and
yeah,
like I want to. Like I
yeah.
think it was David Sachs. I think it was like David Sachs or Chamal Balaji. There was a couple of folks that like try to like get that off the ground. I want to like go back and research that for a later episode, because I think it'll be interesting to see like where did that go? Like why didn't that take off? Um, because that's I don't know, could be an interesting comp to look at.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. This episode is brought to you by WalletConnect, the connectivity network shaping the future of on-chain UX. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. With over 220 million connections and 35 million users worldwide, WalletConnect is the place to power your Web3 experience. With the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. To learn more, follow WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next. Hey everyone, Jason here. Earlier in today's episode, you heard me mention the weekly CIO memo from Bitwise. In an industry as hectic, fast, and complex as ours, it's incredibly hard to get an easy, no-nonsense stream of what's actually moving crypto. The memo comes from Matt Hogan, Bitwise's Chief Investment Officer. He's been on the show before, and he has this amazing ability to take the most complex topics and break them down with clarity. Trust me on this one, the Bitwise Weekly CIO memo is really worth the 5 minutes of your time. Check it out at bitwiseinvestments.com/CIO memo/empire, or just hit the link in the description of today's episode to get started. Carefully consider the extreme risks associated with crypto before investing. One more interesting thing from this week is the stablecoin bill, which I think people thought was just a lock, is no longer a lock.
You had to be a Debbie Downer after this fantastic episode about all this positive stablecoin news.
It just blows my mind that the Dems are turning on this thing. So okay, right now we've got 240 or 250 billion of stablecoins outstanding. 90% of those are fully collateralized. We've got stablecoin transactions doing more than Visa and MasterCard combined. Stripe is rolling this thing out. And we've got this Genius Act, right? The Guiding and Establishing National Innovation for U.S. Stablecoins Act 2025, the Genius Act. It's on the finish line, right? It's the Senate's stablecoin authorization and regulation bill, and we're just trying to bring some clarity and certainty to this kind of gray area right now. It was introduced, I know a lot of people know this, but just reminding people, it was introduced by Haggerty. It's co-sponsored by both Republicans and Democrats, right? Tim Scott, who's a Republican, Kirsten Gillibrand, Democrat, Lummis, Republican, and Angela also Brooks, who's a Democrat. So you've got this bipartisan bill, and what this is going to do is it establishes this oversight and regulatory regime for stablecoins and issuers in the U.S., and it creates pathways for innovation. It creates pathways to enhance the dollar's distribution, grow the dollar's reserve status, and stablecoins issued under this framework would be highly regulated, right? Highly regulated by federal standards. And the Senate Banking Committee voted the bill out of the committee in March with an 18-6 vote that included 5 Democrats. But actually, the other day, an updated draft was released, and it included several substantive updates, enhancing language on national security, financial system safety, and regulatory accountability. And then just the other day, a couple days ago, 9 Democrats published a statement saying they're going to oppose if additional enhancements were not made relating to a bunch of different areas. So right now, I think, I don't want to say it's in crisis, but the stablecoin bill is, you've got some key Democrats backing away, and it's not, I think I was like, all right, the stablecoin bill's locked. We're moving on to the market structure bill. It doesn't seem that way anymore. So that would be a setback. That would be a big setback, because look, this thing's happening no matter what, because look at what's happening in the world. But
That's sort
Yeah.
of look. Of course, it's important. I think you know more about politics, but maybe we should do another roundup of like having Rebecca or some of the folks that are Jake and Rebecca talk about this. But one of the other stories that we haven't talked about in the pod is just came out today. Fortune was covering it. Exclusive Meta in talks to deploy stablecoins 3 years after giving up on a landmark crypto project called Libra. Um, for people that are obviously familiar, like Meta explored this in 2019, built a Libra consortium, and then kind of like shut it down. But now it's looking at it again. So,
Wait, what is
this is
this?
not
Libra is coming back.
Meta. Meta is now exploring stablecoins.
Oh, didn't I call that? I called that. Called that a couple
You
weeks
did.
ago.
You
Let's
did.
go.
I mean, here's the thing, right? If you're Zuck or any major executive, like you're seeing these companies like Visa and Stripe and Ramp and all of them, like really just adopt stablecoins, like embedding payments in your app. If you're Facebook, made all the sense in the world in 2019. It was just a very different regulatory environment.
Yeah.
Like, should Facebook have bought Bridge? Do you think they looked at it? What could Facebook go buy is probably a more interesting question. Like, what is the next acquisition? Because probably Meta makes an acquisition here.
Look, if Zuck is offering, I'd take 5 billion. I'd take 5 billion. Maybe even 4. I'd help him launch a stablecoin.
Yeah, look, I mean, I think we'll see. I mean, hypothetical, but would Facebook buy Circle?
Ooh, that's a good one. That's a good prediction.
I don't. I
know
need to think
you're not
about,
saying a
like,
prediction, but that's an interesting hypothetical.
well, you remember when Coinbase was in the like nadir, like it was trading at like $20. It was trading at 1/5 of the valuation, right? It's 208 now. At the bottom, it was like a $26, right? I believe, right?
Something like that. 30.
So it was like basically you could have gotten Coinbase at a 87, 90% discount to what it trades today. Back, and that was 2 years ago. Would that have been an interesting acquisition if you're a large financial institution? I don't know. It's a $50 billion asset now. Maybe I think this is where Meta likely acquires something. I'm going to call it. I think in the next quarter or two, we're going to see far more M&A activity of the likes of Meta and potentially other players.
Coinbase earnings are in.
There we go. Yeah.
Should we take a peek?
Let's take a peek and then we'll close the pod.
Cool. All right. Q1 consumer is down 300. Consumer revenue is down from 1.3 billion to 1.1. Institutional down by like 33%. Other transactional revenue flat. Stablecoin revenue up bigly. Up, what is that? Roughly 30%. Blockchain rewards, that must be base, down roughly 10%. Interest flat. Subscription revenue up, let's call it 5%. Net revenue down. That looks like, what is that? 10%? 20%? Down 10%. Here's Ben Strack's overview. Total revenue of $2 billion in Q1, down 10% from Q4. Transaction revenue of $1.3 billion, down 19% quarter over quarter. Subscription and services revenue up 9% quarter over quarter, driven by USDC market cap hitting a new high.
Yep. There we go.
What's the old stonk doing?
It's down aftermarket. Like it's actually flat, down 1%. I mean, It rallied a lot. It was up 5% based on Deribit acquisition that was announced earlier today. Now it's like flat. After hours, it's just kind of like down 1%. But
all right, quick listener session, which is the Empire listener section is a new section that I'm adding today, which is someone in the Empire Telegram chat said, I want to hear what you guys think of MicroStrategy, Bitcoin corporates. MicroStrategy, the biggest buyers of Bitcoin. What do you think the overall trend of new companies adopting the Sailor playbook? My take on it is mediocre companies will adopt this playbook. I don't love the corporate Bitcoin treasury. I don't think like really amazing companies that have phenomenal EBITDA, revenue, growing products will move a bunch of their treasury into Bitcoin. I don't actually think it makes sense to do that. I think if you are a subpar company with a shrinking business. I mean, remember, this is what MicroStrategy was. They were the seventh best player in a crowded data and analytics space. They were losing to Power BI, Looker, Sisense, Tableau, etc. If you're in that place, maybe going all in on Bitcoin could make sense. But I don't think incredible companies should be loading up on Bitcoin.
Well, you basically become a holding company, and that's fine if you want to do. There's two components here. One is taking an asset that is kind of not catching a bid, and then taking advantage of the fact that we continue to have this premium for exposure to crypto. Even though you have ETFs, people like to express leverage long bets on the particular sector. That's what MicroStrategy is, right? They're basically levering up and have a levered exposure to Bitcoin, right? And I think I believe that premium goes away as you have more ways to express exposure to the space. You know what I mean? This is the whole premium of GBTC, the grayscale products, when there was no ETFs, and then that went away. Well, now you have ETFs, but then you have MicroStrategy that does a kind of a levered Bitcoin exposure. But then you're gonna have options, and maybe you're gonna have perps. And so as more of the products that we've seen as crypto natives are embedded in traditional markets, I think that this strategy kind of starts going away. And that premium kind of goes away because it's probably cheaper for you to kind of express that view with options or other financial instruments. I don't know. That's just my view. That's not to say that other companies are not going to do it. I think you're going to continue to see these basically this lag and regulatory arb of sorts.
Yeah.
But I guess the more interesting thing is, are you going to see, it'd be actually really interesting. Are you going to start seeing more and more companies publicly disclose their holdings, or even just stablecoin as a keyword in financial earnings? If they're holding stablecoins or they're transacting in stablecoins, as more and more of these financial players start transacting in stablecoins, are they going to disclose that? And if they're going to disclose that, is that going to be hey, we're able to reduce a couple basis points or working capital optimizations because we're starting to use this new thing called stablecoins? Imagine the commentary in that. Hey, by the way, working capital, we've been able to move inventory faster, or accounts receivable went down because we were able to, optimize that with a thing called stablecoins. If you're a CFO or a finance department in a large multinational corporation and you see your competitor, all of a sudden their days receivable goes down because they're using stablecoins. Yeah. That's I'm sorry for all the corporate nerds out there.
That gets that CFO going.
Optimizing working capital is the name of the game. It's the name of the game of private equity. It's the name of the game for every finance department in a large company. Corresponding banking accounts, pre-funded accounts, my God, there's just so much inefficiency in the financial system. And so over the next year, pay attention, control F when you see a 10K, 10Q stablecoins.
Dude, let me gloat for a sec. Look at this, because I never get my predictions right. I'm always 0 for 10, obviously, you know that.
That's not true. I think you got way more predictions.
Look at this. Look at this prediction at the beginning of the year. Stable coins become great for crypto's brand. Oh, wait, no. At least one major bank. What is going on with this? At least one major bank, one major tech company, and one major fintech launches their own stable. Real businesses adopt payments. It's boring, but stablecoin market share goes parabolic. Stablecoins become great for crypto's brand. Banks issuing their own stables increases consumer trust and accelerates global adoption of crypto. Normies and regulators understand stablecoins. Crypto finally has a use case. This leads to stablecoin legislation. Wow.
Yeah, no, you're
finally got something right.
Sir, you either become a delegate or a high frequency trader poly market, or you're in the wrong business. You start a hedge fund.
There you go. All right, we are ending it with this. You put the Harry Potter stuff up.
I know.
Let's go.
Well, this is not my collection. These are just the normal books, but I actually shifted it. Most people see that.
Oh,
this is always going. By the way,
you always had it.
Kobe, and Jordan. Just two. I love athletes. I've learned a lot from them. Go listen to the founders podcast on Kobe and Jordan. It tells you everything you need to know about hard work and being lucky. Which I will make a book recommendation. I've been reading a lot. 2 books. Creative Design by the guy who invented the keyboard for the iPhone and the iPad. Phenomenal. Like, just wow. The second one, What I Wish I Knew in My 20s, I think. Phenomenal book. Like, and it talks about, I tweet about this, a section about the difference between fortune, luck, and chance.
Mm.
And it just helped me think, because like I've had another podcast thinking about, like, we talk about being lucky, but most people confuse those 3 terms, and it was just like kind of eye opening. Really, 2 very, very good books that I would recommend people.
I'm on the last chapter of Chip War.
Oh, phenomenal!
Great book. Yeah.
You want to read the next one on that? It's
what's the next
called
one?
Commodities, I think. Wait one sec.
Interesting.
Wait one sec. It's called, Material World: The 6 Raw Materials That Shape Modern Civilization by Ed Conway. There is a section in there, spoiler alert, that talks about, just Google this. Everyone should go Google right now. Just Google, what is this? There's a mine in North Carolina, Bruce, I don't want to butcher it.
I have no clue what you're about to say.
Spruce Pine mine. It's a high purity quartz mine in North Carolina. Chip Wars says Taiwan is a choke point of the world because like 60% of all chips are made there. Over 90% of the super specialized chips are made in Taiwan. No.
Spruce Pine is home to 2 mines that produce 90% of the world's high purity quartz. Damn, this thing must be guarded.
Dude, if Spruce Pine goes down, the world comes to a halt. I'm just gonna read a second. Ladies and gentlemen, just listen to this. In the material world, there are very few such cases where we are so utterly reliant on a single place. He's talking about this mine. There are a few micro producers in India and Siberia, but nothing to rival consistency and quality of the 2 mines in Spruce Pine, which raises some unsettling questions. What if something happened to those mines? What if, say, the single road that winds down from them to the rest of the world was destroyed in a landslide? Short answer, it would not be pretty.
Interesting.
Yeah, I was like blown away by this.
Let's rate it.
It's like more heavily fortified than Fort Knox, by the way. You can't enter there. It's wild.
All right, folks. Good. That's it. We got momentum as an industry. We got momentum. Chin up. Head on a swivel. Things are good. Not my chin. Don't look at my chin. Right Don't look at that chin. Nobody wants to see that chin. Thanks for listening, folks. We have a really, really, really good episode coming on Monday. It's with Tarun and Carlos, Securitizing Gauntlet, who you maybe have heard them on pods before, but it's, I think, the first podcast Christine Moy has ever done. She's a partner at Apollo. She's the head of Apollo's crypto business. You might
and AI too.
Yeah, and AI and a whole bunch of other stuff. You might know her because she used to run blockchain and crypto at JP Morgan starting back in 2016 after Amber Balde left. So really amazing podcast about Apollo's new credit fund that has moved on chain. So listen to that, and we'll see you next week. Thanks, folks.
All right. Thanks everyone for listening.